Hello everyone, this is Siham from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Wednesday, 5th of January 2022. Let's begin with the US oil, where in the previous videos we said that it is moving in an uptrend in the 4-hour time frame, and we were waiting for it to rebound down off of around level 77.20, which resembles a horizontal resistance level for the US oil in the 4-hour time frame, where we said that it will be correcting towards the support area between levels 74 and 73.15 before continuing with the uptrend in the 4-hour time frame. Recently, we can see that the US oil has retested the support area and rebounded upwards off of it, where it is currently being traded around level 77.20, which, as we said, is a horizontal resistance level in the 4-hour time frame, and therefore, by breaking upwards to it, it will support the continuity of the uptrend and the targeting of around level 79 as a primary target in the current uptrend in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the indicator rebounding upwards off of around level 40 and currently moving above level 50, it supports and shows the continuity of the uptrend. That was it for the US oil. Let's move on to the Australian dollar versus the US dollar. In the previous videos, we said that the pair is moving in an uptrend in the 4-hour time frame inside the downtrend in the daily time frame, and we were waiting for it to rebound down off of around the current levels, which were near level 0.7270, due to that area being a reversal area, as we have already stated the reasons for it. And we said that by rebounding downwards off of it, it will support the continuity of the downtrend in the daily time frame and the ending of the uptrend in the 4-hour time frame, which is the upwards correctional movement in the daily time frame. We said that this will be confirmed upon breaking down through level 0.7210, and recently we can see that the pair has broken down through level 0.7210, where it reached level 0.7185 and then rebounded upwards off of it, where it is currently being traded between levels 50 and 61.8% Fibonacci of the previous downwards movement, and therefore it is considered to be a reversal area for the current upwards correctional movement inside the downtrend in the 1-hour time frame. By rebounding down off of around these levels and by holding below level 0.7250, which is the most recent peak that has been formed, it will support the continuity of the downtrend in the 1-hour time frame as well as the daily time frame. Another thing to support the rebounding down off of around the current levels and the continuity of the downtrend is that if we notice the MACD indicator in the 1-hour time frame, then we can see that there has been a negative crossover between the signal line and the MACD line. If we notice the 4-hour time frame, we can see that recently the pair is moving inside a rising wedge, which is an uptrend reversal pattern, and therefore, by rebounding down off of around the current levels, as we said, it will be expected to break down through the lower boundary of the rising wedge and break down through level 0.7185, which will then support the continuity of the downtrend in the daily time frame and the targeting of around level 0.7090, then around level 0.6995 as primary targets in that downtrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the rebounding down off of around level 50, it supports the rebounding down off of around the current levels and the continuity of the downtrend. That was it for the Australian dollar versus the US dollar. Let's move on to the gold. In the previous videos, we said that the gold is moving in an uptrend in the 4-hour time frame as well as the daily time frame. However, we also mentioned that it has shown signs of weakness, yet it is still continuing. And we were waiting for it to target around level 1834, then 1849. However, recently we can see that the gold has reached level 1832 and formed a new peak around it, where it then rebounded downwards off of it in order to correct towards around level 1789. However, it also formed a new higher low around level 1798 and rebounded upwards off of it, which also supports the continuity of the current uptrend in the 4-hour time frame, where by breaking upwards to level 1832, it will support the targeting of around level 1849, then around level 1875 as primary targets in the current uptrend. It is important to note that although there has been signs of weakness inside the uptrend, by holding above level 1798, the uptrend is still continuing. If we notice the RSI indicator in the 4-hour time frame, then we can see that although the indicator is showing more of a sideways movement, however, due to the rebounding upwards off of around level 40, it supports and shows the continuity of the uptrend in the 4-hour time frame. That was it for the gold. Market Equity wishes you successful trading. Thank you for watching and have a good day.